Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Monday, FOMC week, and we already have a little bit of a downer of a session going on here. Coming over to the charts. We're just getting right into it. Here's the ES. Things started roughly positive during the Asia session, but as things wore on, we started moving down. And I'm gonna go a little out of order today because I'm a little concerned that we're also seeing oil slump here. We saw that on Friday. We're seeing it here a little bit again today, and the treasury yields continue higher, pushing up into levels that we were at during the January non-farms and when Jamie Dimon said that the Federal Reserve may raise more than 4 times this year, or this cycle at the very least. You can see the yields are flattening a little bit. It's kind of a little fuzzy, but it looks like that there may be some flattening going on, particularly here in the 2s and 10s. Coming over to some of these other assets, we got natural gas is still chilling in okay territory after that scary spike. Ugh, that spike was a little scary, but in the end, not a big deal. Gold and silver, they took a little bit of a hit. Gold took a little bit of a hit, and it's kind of even. Silver, they've kind of diverged a little bit here for some reason. So that might just be a pullback. I don't know. It is up. Silver is up pretty good. My voice cracking. And copper also not looking so good. So that's a sexy drop on the ES, man. That is not the word I would use. Now let's come over here to Bitcoin. So Bitcoin dropping below 40K on Friday, and now this morning dropping below 35K. So we have now just busted through. Oh man, I mean, okay, so look, there's still 30K. There's still 30K from the summer that could lend some critical support. I tell you what though, if they break through that, the Bitcoin people, they really believe in the technical analysis, and they're probably going to think that if they bust through that we come all the way back and that it's like a double top. But the bigger thing here is that there are some guys like Michael Saylor and all these guys, right? They really loaded up in the 30 to 40K range. So if we start failing that level, it kind of starts to get ugly, right? And I wonder, at what point, is there a point at which some of those guys are forced to sell? It could be really not pretty. And I'm sure that Air Cages is super happy this morning, having taken the risk on the short. Bigger balls than I'll ever have, I'll tell you that much. All right, so let's see here. Does the microphone sound okay to you guys? I'm just gonna turn my my own monitoring up a little bit. So I'm a little torn here because on one hand, I can see the treasuries continuing to move up, but on the other hand, like, it's already up really big this morning, and there's not really any change in the how do we say? I don't see a huge change in the fundamentals to be driving this move. So I'm a little concerned, and also I am also looking at. Well, so for flows for today, I think one of the probably the most dominant thing that we got going today is that there was a ton of gamma on deck for last Friday, And so today, as is implied in the title, I'm thinking we're going to get an unclenching. And I think that that may be supportive to the equity indexes. I'm also seeing some really good like stock buyback and other kind of price insensitive flows coming in here, buying things up. So I actually think that you might see some support in the S&P 500 this week. But as of now, it seems like that they care about other things, possibly rates. I don't know. And the difficult thing is that the rates aren't going up right now. The rates are going like risk off. It's everything is just completely risk off for almost no apparent reason, in my opinion. Well, do we have anything else today? Oh, well, we do get we should have just gotten the Chicago National Activity Index. I don't know why it's not showing up on my screen here. But after the market opens, we got services PMI and manufacturing PMI. So those are two things that may help guide us through the session as well. But again, especially with oil on the downturn, I'm a little bit concerned about the degree of risk off that we're seeing here. And I may just continue to sit on the sidelines here a little bit. I haven't traded as much as I probably should have. I really should have taken advantage of those yields crashing higher at the beginning of the year, but Tobias Born says bottom has not been reached yet. I don't think so either. Of course, I don't really know. But the thing is in my mind, panic is good. Panic usually means that we're close to the bottom. And I'm not so sure that I see panic. Even this move, I mean, like they're selling off, they're selling pretty hard, but I don't see people panicking. Like Bitcoin, I don't see people panicking. Like I think that some of the noobs are panicking, but the big fish aren't. You know what I mean? It's just a little doesn't feel like we're quite there yet. I don't know. Well, it may blow my nose here. There we go. Now it's showing up. Chicago. Oh, no, it's not showing up. Good grief. Let me see here. Maybe I need to refresh. Negative spot 1.5 versus the previous reading of spot 3.7 for the Chicago National Activity Index. Not really a big mover, but they might have bought too much last week. They bleeding it out. Maybe. I don't know. I mean, who was buying it last week, though? That's the thing. Okay, so you know what? I think I need a Kleenex box here. Where's my... Paper hands. Well, that's definitely the case too. It is very curious to me how easily deterred the retail is seeing here. Like they did try buying the dip, but then it kind of didn't work and they kind of got scared away. Twitter was trending by the dip last two. Yeah. Well, from my perspective, if I were to deploy some capital, right? So I have a little bit. Actually, not a little bit. It's actually more than probably 25% of my portfolio in cash. And You know, if I was going to put some of that to work, why would I do it today instead of waiting until I see what Powell is going to say, right? So that could be a factor as well. I'll tell you what, though, in Bitcoin in particular, I mean, you would have thought, now, how do I put it? There was a lot of people on TikTok, influencers in TikTok being like, buy the dip. And saying, you know, this is probably a place where it'll probably turn around and this and that sort of thing. It's like they're still in denial, right? Like over in the cryptocurrency market, this is the crash. This is the crash. This is the one that usually goes 80 to 90%. So if it doesn't go to 80, 90%, I would be a little disappointed, right? How far of a dip is it now? In fact, we could come in and say, I wish I had something that was like, oh, actually, I could probably do it this way. I come over here to the chart. I come in and I put a Fibonacci retracement on it. And I just go from 0 to the high. What was the high? Let's see here. Turn on price snapping. No? Maybe I need bar and price. There we go. All right. Now we're going to change this. Properties. And we're going to say data. And we're going to put the low at 0. Right? And then levels here. Yeah, 50%. Change this one to, how should we say this one? 80%. And we'll add one here. 90%. Make that visible too. Click OK. Wow. So a 90% decline would have them down into the 7K area. Oh, man. But it's probably more likely. Oh, did it not? I didn't turn the other one on, did I? 80% is probably more appropriate and likely, right? Levels. This one didn't make it visible. And we'll add another one. We'll add a 70%. Apply. There we go. Okay, so probably most people are going to be targeting the 70K, which would be in the 20% area. Sorry, 20K area. Then an 80% decline, which is what we normally see, would be 14K. So, I mean, it's a pretty crazy move here in Bitcoin, but based on past bear markets, past declines, there could still be a lot more pain. Powell is caught in this inflation. I am too. So here's the thing that is pretty crazy that's happening this time, and I haven't seen in bonds before, but it certainly was always kind of a possibility. It was something that I kind of always wondered if that ever mattered. So there is a blackout period for Fed speakers, right? Where for like the 2 weeks before the meeting, they're not allowed to talk or do anything. And in that blackout period, I was always like, well, does it ever really matter? And during that blackout period, all of these market analysts have been coming out and saying stuff, right? So I think the first one was when Jamie Dimon said that he thinks that the Federal Reserve might raise more than 4 times. I'm still a little uncertain if he was saying that that was going to be like this cycle or this year. Because if it's this year, that's like, oh boy, that's crazy. But then there was the Deutsche Bank guys saying that they might do a 50 basis point raise. Remember that? And now this morning, Goldman Sachs has been saying that the Federal Reserve might raise every meeting this year starting in March. So that is probably why we're seeing the interest rates kind of, well, I don't know. That may be why we're seeing the market overall be a little bit sour, but we're not really seeing interest rates rise per se. So, right, we've had this period where all of the big market analysts have come out and changed their expectations, and the guys in the Federal Reserve haven't commented on this at all. So, if I was in the meeting, first question I would be asking is, some market analysts have been warning that you might raise 50 basis points in March. How is that a possibility? Is that something that you've discussed? How likely do you think that is? Right? Because the Federal Reserve, the members of the board haven't said anything publicly to indicate that they would do a 50 basis point rise, for instance. Right? But we've been in the blackout period, so who knows how their opinion and expectations have changed in the last 2 weeks. The market is very different now, but I also kind of wonder if it's not if they're not more dovish here because of all of this. Like, I feel like the extra money that was out there because of the buying of the bonds and everything was a bit too much, but I'm not entirely convinced that we have to dramatically raise interest rates to combat inflation, but we'll see. It could be that you need to induce a mini recession here. That may well be the case. The hint of returning to normal would be no need for more booster shots. Well, first of all, we've already kind of seen that. I think it was the World Health Organization that said this first, but they've basically been saying that, like, too many boosters too quickly is not a good thing. So I think that you'll see a booster every year, but you think Joe is going to allow a major stock market crash going into the November elections? I think he will have Powell's hand tied. What makes you think that Joe Biden can do anything about it? He already reinstated Powell. He already renominated Powell, right? So any kind of leverage that Joe Biden might have had over the Federal Reserve is already gone. And quite frankly, from the perspective of Joe Biden, I don't think that his political apparatus thinks this way, but if I was on his political team, I would be saying, let the Federal Reserve do their thing and let them get it over with quickly so that you can recover and be ready to run again in 2024 and be able to say, well, we had an inflation driven run because of the supply constraints, but we were able to get through it and I let us out of it. That should be the long game for them there. Trying to hold the Federal Reserve back right now, then you're just get more inflation, and then you're really going to look bad in 2024, right? So, but I disagree vehemently. I totally respect your opinion. Your opinion, Jordy, is a common one that I see out there a lot. That the president and Congress has control over the Federal Reserve, and the reality is that they don't. Um, and the reason I disagree with you is because I have seen so many times over the 36 years of my life. I remember watching the news even when I was a little kid. Okay, the president and Congress do not control the Federal Reserve, and they would love nothing more than to do so. Do you think that Ron Paul would be out there saying that we need to audit the Fed and basically putting in these bills that would basically give them the ability to uh, review Federal Reserve decisions and overturn them practically? Do you think that he would be pushing legislation like that unless if they already had control of the Fed? Right? The Fed is independent in the end. Of course, they want to try and play along. They want to help, and they totally work with the White House and coordinate things. They did this last time around. They basically said, like, we need fiscal stimulus, right? The fiscal stimulus that they put out was too much, but I mean, they coordinated though, right? They talk to each other, they coordinate. But if the Federal Reserve sees inflation rising and they need to raise interest rates to combat inflation, they're going to raise interest rates. It doesn't matter what Joe Biden thinks, right? Doesn't matter who has the joystick. Yeah. Well, and again, the Federal Reserve is very data dependent. This is where the thing that I've been seeing for the last 6 months, part of the reason why I'm focusing on this one so much too, is that for the last 6 months, I've been saying, well, interest rates are going to have to rise here. And everybody's been saying, no, they're not going to do that because the politicians will never allow it. And the Federal Reserve is never going to allow the stock market to ever take a decline. And they got to keep the Ponzi scheme. And I'm like, no, guys, the Federal Reserve is data dependent. And if the data says that they need to raise rates, they're going to raise rates. And right now, the data is saying that they should have already done it, that they probably should have done it back during the Delta was going on, but they held off because they thought that there was more risk to the economy from Delta than there actually was. Now they're behind. It's going to happen. And all of these people, so many people in the market, expecting this money to last forever. And then January, end of December, January comes along and interest rates rise and they're completely shocked and surprised. I'm just like, come on, guys. And that's why I kind of push back against that one a lot. Because I feel that attitude has led to a lot of people making the wrong call. Do you know how much interest rates have risen since March of 2019? Well, like nothing, right? We were at like what? We were at like 1.25, and then before they had to start pulling back, right? That one was kind of dumb though, because oh man, hold on. The Federal Reserve in 2019, they were raising rates, right? And then, well, it wasn't 2019, it was 2018, right? So in 2018, they were raising rates and like things looked good, but the fall of 2018 was kind of ugly. And not for any really good reason, it just kind of was. And then the Federal Reserve was like, no, we're still going to raise rates on December. And that was the one where I was like, are you crazy? Like, well, I'm you guys are the experts, but kind of seems to me like the market is panicking here a little bit, and that it might make sense for you to hold off and raise in, January or March. And like the funny thing is that if they had just waited, a few months, they could have done that. They could have maybe avoided a little bit of trouble, right? But then, of course, since then, and that was the crazy thing, was that they kind of did. Then they had to give in, and they did like their mid-cycle adjustment move. Fine. You made a mistake. And then COVID happened. So now we don't know. I really want to know. I really, 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 more than almost any other economic question about economic history in my mind, I really want to know what would have happened if coronavirus hadn't have happened in 2020 with monetary policy. Would it have all been fine and then the Federal Reserve would have been able to continue rising again after that? Or would we have gone into a recession anyways? Because what y'all saying is that we would have gone into a recession anyways, right? And I don't agree with that, but at the same time, I guess I don't really know because we didn't get to find out. But the problem is that people do not understand it's not the Fed that controls the fixed income market. It's only the short-term interest rate temporarily. That's not entirely accurate. So if COVID didn't happen, Trump would still be. Yeah, that's true for YouTube finance. I 100% agree with you on that one. If COVID didn't happen, Trump would still be president. Yeah. So there's that one. It's also when you start getting into alternative history sort of a thing. It's like, okay, what if Germany had won World War One? Right? Because of course we kind of all think about the what if Germany had won World War Two? That's one thing. But trying to say, what if Germany had won World War One? What would have happened? And it's like it's difficult to even try to sort out at that point what would have happened. Because if Germany had won World War One, then what? No more, certainly no more Hitler, right? And I don't know, like, would there still be like a unified monarchy sort of a thing in Germany? I don't, this is it's kind of weird to think about. You almost can't even make an accurate kind of conclusion because the world would just be so radically different, you know? So if COVID hadn't happened, I don't know, but we could at least see what would have happened to interest rates. I say if COVID hadn't happened, that interest rates a year later probably would be roughly the same, if not a few rate hikes higher. So TLA is also saying something else that I kind of see around that, like, keep an eye out for Little Buyers Wednesday. Yeah, I may just kind of sit on the sidelines a little bit. You can see here, I made the right choice by not jumping on the bandwagon here in the treasuries. So I suppose that, well, if I thought there was going to be continued moves, I could try selling 1.730. Wouldn't be a bad price, and on the bet that they go back up to those highs. But given the time right now, I think I would rather see if we get the money in the equities and how the treasuries react to it. So here's the thing. I see this. So there's another view that I see out there a lot, which is that the Federal Reserve doesn't actually control anything, that they don't actually have any power over anything. And I don't think that that's true. So the problem with this sort of idea is, like, if the Federal Reserve went and raised interest rates, right? And the people in the 10-year decided that they weren't going to go along with it, right? How would that work out? Well, I don't think that would last for very long, because what people could do is they could arbitrage the short-term rates against the longer-term ones, right? It's like, well, why would anybody buy a 10-year at that point if they can make more money just buying and rotating through at the Fed discount window, right? That's the effect that it has. That's why it has an effect across the whole curve, right? They don't directly manipulate it per se, but it has a massive impact on the whole curve still, because you can arbitrage across parts of the. I mean, that's basically what interest rate curve trading is, right? It's basically like arbitrage across the curve. And it's kind of an interesting arbitrage because there is a little bit of risk and question about what happens along with that. But that's why the Federal Reserve controls rates the way that they do, is if they can modify just that one short-term one, and it's like they're just leading it. It's just like a horse pulling its head one way, and the rest will follow. And that way they can do what they need to do while exerting the most minimal amount of influence on the market. It's actually quite clever. What did you call the opposite of latent? I don't know what I would call the opposite of latent liquidity. But the key thing here, Nasdaq killer, is when it comes to latent liquidity, is that you can look out there and you can see how much is resting at any individual price. A large portion of that liquidity that you see out there, particularly in the thick instruments like the 10-year, is just people trying to get a good spot in the queue, because where you're at in the queue really matters for those robots, right? But a lot of it, if we tick down, a lot of it pulls, right? And then stacks back on. And so how do you determine, obviously a large portion of the supply, a lot of the supply of limit orders at that price is just not visible until it starts to trade. And that is called latent liquidity. And when you start to model out the dynamics of latent liquidity of, they'll take certain amount out and then, they'll reload over and over, but there's still only just a limited amount of latent liquidity willing to even trade there. Once you start to model those out, then researchers have been able to recover these odd behaviors in the impact of meta orders, like the square root law and all of that, right? So that's why we want to try and watch what the latent liquidity is doing and look for signs that the latent liquidity might be stressed in that particular instance, which would mean to me that the resting liquidity is kind of small, and it continues to be small over a period of time, right? They're only willing to put like 500 contracts up at a spot, and they do that back and forth for like 30 minutes. That's a liquidity hole. Makes sense? No video this week, but we are going to kind of review all of that stuff next week. I'm just going to go through the main properties of markets that we want to pay attention to. And then we'll see how you guys react. And if you guys start asking a bunch of questions about one or the other, then we'll make another video about it. My head is still draining. Maybe I just didn't drink enough before I went to bed. So I don't feel sick at all, but I still got a lot of really thick mucus dripping out of my ear cavity, I guess. My intention is to hold that ZN short all year. In fact, the key thing, so my rule here is I have to be short at least one contract. That's what I'm thinking. I have to be short at least one contract. And the key here will be, at which point do I add a second contract? Now, if I want to do some, what should we call it? Q jockeying, I guess. Is I guess what I kind of think of it as. Oh, I have it already up over here. I can change over to this, and now I don't have, I can change to a different account that I don't have a position on, and I could try trading it here. But I haven't seen the need to do that yet. I've kind of found that it's been helping a little bit to just kind of be sitting on my hands. Man, if I had taken that 1.73 when I had mentioned it, I would be doing okay. Do you think that it's going to come all the way down though? The S&P 500 is still selling. That's just saw a little bit kind of there at the top of the hour. Saw another bout of selling. So here's a thought on that, by the way. This whole CTA strategy of having one contract short and just holding it on for a long time. So let's talk about distributions, right? Markets tend to follow power law distributions, which means, let's just suffice to say, let's simplify it down to they're not Gaussian. Okay. We all think that it follows this Gaussian distribution where everything's kind of in the center and then, it levels out random. And markets don't tend to be that way. What tends to happen with markets is they tend to be fat tails, which means that there are more. Actually, I think I've misinterpreted what fat tails are in the past. Okay, wait, where's my, nope, that's not it. Where's my pen? I just started it up there and then it didn't come up. Epic pen. Come out, wherever you are. There it is. Okay. We all think that markets are like this, right? But markets are actually more like this. Which means that there are a lot more data points here in the middle, but there are data points so far out here that they end up controlling the whole thing. Like there can be a data point where the amount that you win or lose is more than everything that you made up in here. Okay. And when you have an area like that, all of your tools that you're using for Gaussian distributions, particularly standard deviation, right? Because we come in and we say, okay, but if you get to a first or second standard deviation, then 80% of all points are going to be inside of here, right? And what do you do about that, right? Well, I think that a retail trader, a scalper, ignores that because the scalper says, well, yeah, but what I do is I come in here and I have a stop loss and a take profit. And so I go like that and then it doesn't matter, right? Well, so here's how I think you have to think about it, right? Instead of thinking about your distribution as each individual trade, you should be thinking about your distribution as a day or a week or a month, right? Where you've taken multiple trades. So when you map out your days, that's what you're going to see. You're going to see most of the time, a day, you're going to make something around zero, probably zero is probably a little bit skewed here, right? And there are some days where you could lose a ton, and there are some days where you can make a ton. And what happens is that retail traders don't think that these exist. So they're making money over in here, most days they're coming away with money because they're taking on a lot of risk. They have like a target that's way closer than their stop and all that sort of a thing, right? And so because of the really high win rate, you tend to win most of the time, and you tend to find yourself positive most days. But what ends up happening is you end up getting a day that is so far out here on the towel that it ends up canceling out all of your other days. What do you do about that? Right? Because what you really want is you don't want to be in here all the time. You want to have days where you catch this side over here, where you make so much money that, right, and you're going to end up in a Pareto distribution where 80% of your gains come from 20% of the data points, which is going to be all of these tail winners over here. Yeah? So the question then would be, how do we give ourselves more exposure to these? We've had them in the treasuries. I took a couple of them in November, December, but then missed out on them in the beginning of January because I didn't want to trade those particular times. I was kind of a little bit of risk off at those points. Was a mistake, right? How do I give myself more exposure to these? Well, how far out you're going to get on the curve? I'm going to argue that how far out you're going to be on the curve is going to be related to how long you are in the market. So in order to get one of those, you're going to have to, if you really have like set profits and targets and stops, then you're going to have to take a lot of trades that day, or you're going to have to be in those trades for a really long time, right? And that's going to give you more exposure to these, which is why it needs to be you let your winners run and you cut your losses quickly. Get what I'm saying? I think that there's more statistics here that we need to understand to take advantage of those distributions a little bit better, but looks like we get a really shaky market open. Well, there definitely don't look so hot right now, does it? But I'm not going to. We shouldn't assume that this will tell us anything about the open. If we open up and we don't get any kind of a buy off of the open, then that is a problem because, we're expecting to see some buy flows today and this week. So if we don't get those flows, it could be a really problematic for the markets, huh? Longer time frames with short time frame stops. Yeah. I think the first thing is that I need to understand the distributions a little bit better, because I think the whole thing is that if you've got a distribution like this, right, and you have ones that are so long, like tails that are so long, you want to come in and say where are 80% of the data sets are within here, right? Well, depending on what kind of a distribution you have, that's not going to be true. So where actually is that point? And can you adjust where your stops and targets are to better account for the kurtosis of the distribution? So we would just do something really simple. We could do it with market rotations, but we could also, I think that um, range seems to always come out to be roughly the same kinds of properties. So we could do it with those first. Be easier because it's a lot faster to process and so forth. Vol is a square root formula, which means in order for you to be exposed to double the volume, you have to hold the trade 4 times longer. I know some formulas that I could use to time that out, but um I don't know them off of the top of my head, and I don't want to go into my book to pull them out. But they talk about the relationship between volume and the amount of time that it takes and so forth. I don't know if that's true. The problem is some of those big winners have a very good entry point, and when they do is because they will give the bulk of the move right at the entry and they pull back, and then when they decide to run again would be more profitable to get back at the same trend with the new trade. So what I maybe you're saying the same thing, but it seems to me that the problem is that if you've got to move, you know, one of these days where you could really get that big winner could be like this, and the size of these areas right here where it comes back are so large that any kind of like trailing stop strategy that you try and use ends up failing. So how do you let them run? How do you let them run? Because if you try and trail your stops, it doesn't seem to work. And maybe there just isn't a way to do it. But all in, don't trail them all. Yeah. Scaling can help. Scaling, so scaling does seem the benefit of scaling. Number one, I don't know. So scaling is a really useful tool, I have to say. I think that people misunderstand it because they don't realize the risk they're taking on at the beginning, and they maybe would adjust their stops in the way that they did it if they knew. One thing, so here's something interesting that I was watching. Well, we talked about this the other day, but Jean-Philippe Bouchot, market researcher, lead editor at the quantitative finance section of archive.org, which is really the best place for quantitative trading research studies. And he was on a podcast. I don't remember the name of the podcast, but it was some sort of talking with traders sort of podcast. You know, there's like 3 or 4 of them now. And he was doing a study more recently, his most recent study. And they had actually done this previously, like many years ago. Somebody else had done something like this, but they had better data and everything. So they went and they did it, and they looked at volatility before and after news events, and they looked for 4 sigma volatility events, and they found that only something like 40% of the big volatile moves that they could identify coincided with events in the Bloomberg news feed. But they also found that when there was a clear entry in the Bloomberg newsfeed that you could identify with the move, that those moves behave differently than the ones that didn't move with the news, and that the volatility seemed to subside more quickly if people knew what the news was. Isn't that interesting? So I'm going to argue that one way in which you can improve the fatness of your tails, or the fatness of your profitable tails, is to utilize news and to push trades harder when there's favorable news. Leave the stop at break even and scale out. All my best rates are like that. Yeah, but when we would, remember that spreadsheet that we made? Are you taking any hints out of the options chain distribution for your trading? Wouldn't this be good? So I think it absolutely is. And especially like these gamma levels, and like Spot Gamma is a great website to subscribe to, and it gives you some good levels in the S&P 500. I don't know of any key levels at this point. I mean, since we're kind of like in a gamma unclenching, I don't know where you would put things today. Like the thing is to get that data, to use it live and to make really granular kinds of decisions, like I think maybe you're talking about. I certainly don't have the data, and I kind of am unsure how useful it actually would be. The stream has been super well, good. This month has already lost 50% of entire 2021 gains. Man, all of these small caps, people are we're all sitting here wondering, are we moving into a recession, right? And I'm sitting here like, well, for a lot of us, we're already in a recession. If you own any small caps, you're kind of already in a recession. The only reason that my portfolio wasn't just absolutely decimated last week was because I had oil calls. And I'm still not sure what I'm going to do about that one now. If I'm just going to take the money that I made from that and try and put it into an oil stock, for an oil like BP or something like that, I don't know. That seems kind of scary to me. Perhaps that's why I'm narrowing in so much, that even oil is risk off right now, off in this big downer of a move. We got OPEX. Well, I mean, no, options expired last Friday, right? Come back here to our calendar. 1, 2, 3, third Friday of the month. It's options expiration. That was the 21st. So we get OPEX unclenching. Which often leads to buying, but here in the pre-market doesn't look so hot, does it? Here in the pre-market, it doesn't look so hot, but that could change when we open up. So we'll see. We'll see what they do. Man, I'm just like, I keep getting gunk in the back of my throat. Feels like it's plugging my nose. I don't know if you can like hear it with the way that I'm speaking. Now my eyes are watering again. I hate this. I must have really nasty allergies, and maybe I need to get something for it. Maybe I need to get something for it. Because you know what else I'm sick of? I'm sick of having red eyes. You see how red... Wait. Can you see how red my... No. You see how red my eyes are? Sick of it. I'm sick of it. Now, possible war with Ukraine issue. This one is, I don't know. I still kind of got this feeling that something is going to happen in Ukraine, and everybody just kind of like shrugs it off. You don't think they're that red? Well, thanks. Bothers me. One of the things that irks me is that when I'm taking pictures for thumbnails, that I don't get as much contrast in the eyes, so I don't think that the pictures are as eye catching as they should be. Hey, look, we could have we would have gotten filled at 1.720, and they kind of look like they could be headed a little higher. Well, now is not a very good time period to try and take a trade per se. I mean, I suppose I could try going short the rates right there, but do you know any other good resources on quantitative trading? Well, where you should start is you should start with Jean-Philippe Beauchot's book, Trades, Quotes, and Prices, Markets Under the Microscope. Search Markets Under the Microscope. And then the quantitative finance section of archive.org, and that's what I've done. I'm sure that there's a lot of other books that kind of take other ways. One of the things is that there's a lot of quantitative finance sort of stuff out there that's not going to be as applicable to futures, right? What we do in futures is so pure that you're really going to be more interested in market microstructure stuff, right? So one of the unfortunate realities for us is that you have a lot more flexibility with options, right? You can set up all these funky strategies and stuff to give you, the most favorable trade for what you think is going to happen, or based on the data that you got and everything. And so there's a lot more research kind of in those areas, because that's where I think that a lot of these big quant firms and stuff are kind of doing that. The difficulty with trading is unforeseen issues that destroy models. Well, but that's exactly what we're saying though, right? It's not that they destroy models, it's that y'all are building your models based off of a distribution of markets that doesn't exist. Because you've never seen those data points, you don't know that they're there. But we've been around long enough, that we've learned that they are there, and that it completely changes the profitability of your system. Yeah, a lot of quant plays and options focus on volatility plays. Do you mean? When you guys think that, well, I'm just gonna wait for the open here. So the treasuries there, the 5-year in particular, like really went there, didn't it? Oh, there you go. Garch is a good, I forget what that stands for. Garch is like one of the best models, though, I tell you what. Or at least one of the most mentioned. Generalized autoregressive conditional heteroscedasticity. I don't know how it works. Statistical modeling technique used to help predict the volatility of returns on financial assets. It's nasty out there, coach, says Izzy. I should be short from 1.73 and be making $15, dude. I wish I had taken it. But I was kind of like, I don't think there's going to be that much action here ahead of the open, and I'm more interested in what's going to happen on the open. Now we're going to get there. We're going to get to the open, and I'm still going to be like really, uncommitted. Yeah. Now here's the other issue is that it seems to me that a lot of the stuff that is applicable to market microstructure, you've got to be at the front of the queue to take advantage of. It's like I'm sure that there is some mathematical research that we could do that would be a really really big help for retail traders that could help retail traders take more advantage of certain kinds of moves that are available to them. But ain't nobody gonna research it, you know? That's a big order up there at 24. There's something. What is it about that area? 128.24? That's a little weird. 128.24 is a key resistance point from going all the way back to the non-farms to January 7th. So it's the actual high of the month is 128.27, but you kind of have to wonder what it was about that area that caused them. So there could be a real sort of we say some sort of valuation metric that puts them up there at 24. That doesn't necessarily mean that we're going to go up to it. You got to be really careful about saying, there's a big order there, we're going to go to it. Sometimes we do that and sometimes we don't, and my stats suggest that that's not a reliable predictor. I heard last year that with modern tech that a lot of retail traders are catching up to available information. Well, I'm sure that that's the case in options. We could calculate the vol kurtosis for each instrument, and we would at least know how far it goes on those 4 sigma events. Yeah, what you can just use my little tool, right? Like my distribution tool, and you can see how far they tend to go. Or you can watch the whole distribution, and you can do that over, like, you could put like 5 years of charts on your chart and run that. And I think that is giving you a pretty good idea of what the distribution looks like. But my understanding from Mr. Taleb is that in order to be the problem is that because those outliers are so uncommon that you really can't use the actual distribution. You have to be able to determine what the distribution actually is and be able to express it mathematically. And then there are some tools that you can run on that. So the question is, you run that. We determine what is the distribution. I read this book where they talked about an error type of. It was a distribution like this, but he called it like an error reverting or something like that. I searched on Google and I found a few results for it, but I just didn't understand what it was talking about, and I haven't been able to look into it more. And so is that what we use? We use one of those, and then there's some, what are these other tools that Taleb has that you want to try and represent things with, and how do you utilize that to make better decisions in particular? And I think that the decision that we want here in particular is, where should your stop and target be? Or if you're going to trail, where should your trail be? Right. That's the thing that it seems to me that if you go in and you try and use the median or even the standard deviation points for your stops and targets, that you just get stepped out of good trades too often. These other fat tails are more like another. No, I think that there's a formula that can. I'm pretty sure that there's a formula that you can use to pretty effectively estimate what the distribution of 30-minute returns in the S&P 500 are going to be. The 10-year, they still pushing there, man. The 5 is just dragging them up. Here's the open in the ES. What was that first? I never put my Vista chart up for, make it front and center. Well, the open so far hasn't been too inspiring, but it does look like maybe they're going to try and buy it up. I guess I'm thinking that, no. Maybe here. I'm just going to see. I can catch one of these spots and I'll just kind of do a little bit of gambling here with the micros. With the micros on sim. Okay. And then 25 would be... Sure is volatile. Treasury's kind of backing off a little bit. Yeah, I don't understand what you're saying at all, Kyle. Lower time frame distribution will tail, and then this tail will form another distribution, and it will be a liquidity hole. I didn't get what you mean by that. It will form another distribution. You're just looking at every 30-minute interval and how much it made. Gotta understand not everyone awake. I don't know. I think it should. I don't care about the people that are sleeping right now. That was a good trade, though, wasn't it? It was a very, very good trade. Where do we think this can go? Can we just hold this? I know. Like, one spot we could think about taking it off is if we make $200. That would be at 43.50. Oh yeah, that's totally possible. I'm just gonna put an order there. I might cancel it, but wait for me. I'm still waking up. Oh, oh, geez, dude. Bitfinex tweets Bitcoin's Black Swans featuring Doomberg. Well, that could be interesting. Today, Bennett Tomlin and Cass Piance are joined by Doomberg, Twitter, and Substack's favorite little financial chicken to discuss Bitcoin and cryptocurrencies in general, biggest threats for maximum liquidations and pain, including but not limited to MicroStrategy, El Salvador, and Tether. Yes. It really is. I got to tell you, man, if any of those guys are forced to sell, it's going to be scary in the cryptocurrency world. Scary. If I come back to my entry price, I think that I will add up again. Probably should have had it right there. Oh well. Oh well. Everything is a black swan now. If everything were a black swan, then nothing could be a black swan. Yeah. Well, I think that a black swan isn't just that, like, it's a tail, it's on the tail, but like it's so far out there on the tail that we didn't even think that it was possible. We didn't even realize that there were data points that far out. Why did you go long at 43.10? I felt like it. No, my My working theory here today is still that we're going to see a gamma unclenching, which will be bullish, and that we will see some price insensitive flows, like share buybacks, come in this week as well. And even though the Federal Reserve is a big risk event, I think that the Federal Reserve may actually be, a little bit cautious and tame. And so might want to try and play this on the long. Of course, with the way they were selling into the open, excuse me, the way that they were selling into the open, you kind of have to expect that there's at least going to be some selling there. But it was that. And then beyond that, it was just nothing more than just let's take a risk and kind of play around with it, right? But this is also kind of why I haven't gotten into a trade in the Treasury, even though I could have gotten some good prices, right? But the trade ain't over yet. We've been shopping in this area quite a bit, haven't we? You expect some, yeah, we might see some short covering. Because you got to realize that the way that the gamma was, all of these guys were like short, like crazy and stuff, right? So now they've got to buy the shares back. Now that they don't have all of the gamma to worry about, they're going to buy their shares back. Fed will try to put some hot tails after last week. Yeah. Well, again, the market analysts are all seeming to, it seems like they're trying to outdo each other. Yeah. They're all trying to outdo each other on who can make the boldest prediction about how hawkish the Federal Reserve can be, and the Federal Reserve hasn't had any chance to comment about it. And given the way that that the market was last week, I think that at the very least they're going to say no. Like we're still in line with our estimates. We're probably going to raise in March, and then maybe 4 more rate increases this week unless more economic weakness comes in, and then we'll adjust accordingly. I think it's that simple. Wow, that one was so easy. Did you see that one? Market is falling on nothing but talks about rate hikes. Could be. Actually, I think it's maybe a little bit more than that, Lucas, because I think that the interest rates has just kind of been the thing to inject some reality into some people, right? I think the other side of this is that a lot of people bought stocks at valuations that were absolutely ridiculous, and now they're realizing that they bought so high that they'll be down on their position for like the next 5 to 10 years, and that it's best to just puke. I think that that's the other part of what's going on. Yeah, nice. The scale in on that was beautiful. Like we can go way past the current lows and it'd have to go below 4,300 before we'd have to puke. Put a stop order here and there just in case, so that they'll go straight for it. That should be fun. If they go down there, it'll be fun to stop out, right? It's a sim trade, so I don't care particularly much. Kind of wishing it wasn't a sim trade now, though. Like that one never. Did we ever get adverse excursion against that? Hold on. Oh, we need to get rid of that there, and we need to filter to only today's trades. There we go. No, I never had unfavorable excursion on it, and I've gotten 50 ticks plus. Buy crypto and hold for 5 years for a rally that's 6 weeks. Okay, so here's the thing with cryptocurrency, though. Like, hey, oh man, this drives me nuts. Past performance is not indicative of future results. So everybody says, oh yeah, you can just buy Bitcoin now. Doesn't really matter where, because eventually there's going to be another bull market. And when you get that bull market, they're going to be at like 100,000, 200,000, a million, right? And all you got to do is just hold it long enough. And here's my question. Who's going to buy it? Who's going to buy it from you? Now that we've had corporations have gotten involved this time around, right? It doesn't seem like it's working out so well for those guys, and they might have to puke. I tell you what, if Michael Saylor goes under, that's it. I just straight up, if Michael Saylor MicroStrategy goes under, and by the way, if you didn't catch that piece of news on Friday, the SEC basically said that all of the accounting gimmicks that you're doing with Bitcoin on your balance sheet aren't allowed and you have to take them out next time. Okay. So if Michael Saylor goes under, that's the end of cryptocurrency. It's like, well, not cryptocurrency. That's the end of Bitcoin. Seriously. What company is going to be dumb enough to buy Bitcoin after what happened to MicroStrategy? It's not going to happen. In order for it to continue going up, people need to buy it. Well, I mean, there's this whole mining halvening thing cycle, right? That helps. But at the very least, and let's say that continues on and that does drive the price up overall, I think that at the very least, you're going to probably see a bear market that's longer than usual. That is, if we're truly in a bear market. I'm not 100% sure that we are. And you really could see a bear market where cryptocurrency just never reaches another new high, or it doesn't do it for years and years and years. The more Bitcoin falls, the crazier that guy right? Dude, you can tell that to him, it's all just a big scam. That's right. He's like, the most important thing we can be doing is going out and telling everybody to go and buy Bitcoin. Like, he knows that it all comes down to how many other people buy Bitcoin, and that not enough people are buying it for him to be making money from it off of what he did and the amount of debt that he took on to do it. Like right now, with Bitcoin at like what, 3,300, touching 3,300, I'm pretty sure that puts Michael Saylor way underwater. And same with the El Salvador guys too. So does something force Michael Saylor to get out? I think that they would have to really sell MicroStrategy's stock to force him out. He's a sociopath. It may be. I'm quite shocked. I'm totally with you here, Lucas. I'm quite shocked at the amount of power and influence that he has been able to acquire in the cryptocurrency community, because he is so full of crap. Let's try and scale in here a little bit again. See if we can get something. Let's say that's a pretty bearish move though, but look at how volatile it is there, and a lot of absorption. And man, that is just, I think my DOM is having a hard time keeping up. In fact, well, it's not really the DOM, it's my computer. It's like my computer is having a hard time keeping up. Well, I haven't been very bullish since China banned crypto. They were big buyers and miners. Yeah. Well, and yeah, so there's a couple of problems here, right? The one of the big problems is that they convinced a couple of big fish companies and countries with large balance sheets to come in and buy cryptocurrency. I think that was a foolish idea, because what's going to happen? Yeah, it's going to rise and a bunch of other people are going to buy it, but I don't think that that's going to ever come even close to making up for the impact that you had on buying it. And it's going to be really hard to make money doing that, right? But then the other issue is that really, since I'm going for broke here on this, man. Let's be incredibly irresponsible with our sim trades, okay? I just want to be so irresponsible here. Am I crazy just because I got like a good entry on that and everything? I don't know. I don't know. Anyways, so there's your first problem. Okay. So you got these big guys. The companies coming in was not necessarily a good thing. Okay. Because you have to get other people to do it. It's like, right? You've just found the marginal buyer, right? That last guy that's big and is willing to buy the top, and then once he's in, then what's left? Who else is going to buy it, right? And it seems to me that they weren't able to convince anybody else to get in. You've been hoping for the best since March. Yeah, didn't get a very good spot, did you? No offense. This is the one. Let me tell you something. So there was what is this guy's name? I forget his name, but there's a researcher here in Utah. I really wish that he would respond to my private messages, but I'm a nobody. But there's a researcher here in Utah that's done some studies, and one of the studies that he did was on herding behavior, and they basically found that users on Robinhood were more likely to buy a stock if it was featured on the hot lists, and that those traders getting in on those stocks tended to lose money. So herding behavior, basically you're buying it because everybody else is buying it. The reason you're buying it is because it's the popular thing that day. And if it's the popular thing that day, that probably means that you're already at like peak popularity. Or at least you're at an unusual level of popularity that the market is not going to hold for very long, and so you're probably going to lose. That's what I see. And when like Dogecoin was taking off, so we've had people in here in Dogecoin and trying to hold it and all of this sort of stuff and championing it every time that it goes up, and now it doesn't look so hot, does it? Right? Now it doesn't look so hot. I say either one, pick something. Pick a specialty. Mine is interest rates. You could pick oil. You could pick equity indexes. Equity indexes is a really hard one to do, but that's what a lot of people in the futures trading space do. Or you could pick like an industry like tech stocks, right? I know everything about tech stocks. I know what are the best companies, and I know how they all react to raising interest rates. And if interest rates are going to rise, I know that techs aren't going to do very well, but I know which ones are going to be harmed the least from that. And that's you're right. And you're the expert in tech stocks, right? And now you're always there, right? So if something's happening, you're going to know because you're watching it all the time. And you're going to know it before those people on Robinhood get it on their hot list, right? You want to buy it before it gets popular. And then if your asset is the popular thing at that time, like right now, well, maybe not this week, but like 2 weeks ago, everybody was looking at the interest rates. Interest rates was a popular thing. All of a sudden, people on TikTok talking about interest rates. And so what am I doing? I'm not taking very many trades. I'm not taking very many trades because it's the popular trade right now. And I know that if I come in and I'm just like, all right, let's just short this, that probably there's going to be a little bit of a pullback in the interest rates. And that's kind of what we got this last week, isn't it? Right? Avoid popular things. Avoid popular stocks. Buy it before that happens, and when it gets popular, get out. If my garlic coin had taken off as strongly as Dogecoin had, there's no way in hell I would have held that. I would have been like, oh, we're listed on Coinbase. This is a great opportunity to get out. I would have sold into all of them. 100%. 100%. Even if garlic coin had the chances of going to like $1 million and whatever. Because it's popular. Just because it's popular. I don't want to own the popular thing. I digress. The point, what got us started on that, right? Well, if there is another crypto winter, I think that it could be more devastating than people think. I think that all of the people in Bitcoin think that, oh yeah, we're going to go down. You can buy the dip. Maybe we'll have a 70% dip, and then we'll be right back at all-time highs again by next year. And that's usually not how it works, right? It's usually not how it works. And again, there's some really problematic setups in the Bitcoin space right now, particularly Michael Saylor, El Salvador, and Tether. And each one of those has the potential to create a sell event in cryptocurrency that would just be utterly devastating. Like, just think, can you imagine if Tether was, taken over by the Attorney General today, and Bitcoin went, Bitcoin would be like 6K, just like that. Boom. There'd be nobody to buy it anymore. Bought a couple of thousand dots to see what happened. Just sold at a loss. So here's another one, is that everybody says, well, the best thing to do is to just invest in really good projects and hold it. So there was this guy that he bought into, I think it was like in 2017, he bought into all of the top 20 coins and tried to build a balanced portfolio on that, right? And he's still underwater on his position. So there's this idea that, like, you want to get into the cryptocurrency projects that have real utility, and those are the ones that are gonna win out in the long run. That seems to not work. I think that what happens is cryptocurrencies move up because of hype, and as much utility as you might have in your project, they all have severe technical issues that, like everybody was saying, oh yeah, there's all these problems with Ethereum and Bitcoin because of energy use, so let's use Solana. And the Solana network that they have set up is completely unusable. Right? There's like, nobody has it perfect. Probably Bitcoin Cash is probably the best in that respect, but they still have the high energy usage, so I don't know. Tell me, you guys that have been here for a long time, was I forceful enough? Did I say it enough that I didn't think that, particularly the last half of 2021, that Bitcoin probably wasn't a good buy? I mean, I wasn't going to come out and be like, oh, I think the cryptocurrency market is going to crash tomorrow, I'm going short, etc., etc. But I was trying to lead you guys somewhere else, wasn't I? I know my TikTok, definitely. I've been telling people, like, hey, 80% decline. Happens. It happens. There's a lot of things going on in December that are not particularly good for y'all in the cryptocurrency market and might cause some selling. You might want to be cautious about holding through December. What else am I supposed to say? I don't know. You're going to start working for a cryptocurrency company soon. Let's see how their mood is on their first day. Oh, geez, dude. Oh, you're done? Oh, hey. Well, how much did you make, Salim? Hey, you made a good trade. You must have gone short, my boy. Yeah, you know what? I was feeling really good about those longs that I had taken, but now it doesn't look so hot, does it? There is still a lot of volatility going through in the ES, and the treasuries haven't, I mean, they're kind of down, but they haven't backed off too much. Right now, they're mostly just. Right now, they're mostly just in this range. I don't know. 100K, shake my hand. Yeah, I don't. It's kind of funny the way that people deal with prices, right? I mean, like I have numbers on my chart, but what do my numbers tell me? My numbers just tell me like what should be the fair value based on how much it's used. It's not necessarily always going to work out that way, right? Like what because of what we know about inelastic markets tells us that all of these guys trying that the majority of people trying to make price predictions in Bitcoin are going to be wrong eventually. Eventually they're going to set a price target that's too high. It's just inevitable. It's just inevitable. Come on, I want to see. Okay. Apple is famously tight-lipped about its products until they are announced, but new data shows that a new iPhone and a new iPad are coming. Hey. Price target is also very high for a huge amount of stocks as well. Hard day, not comfortable with a 15 tick stop on NQ anymore. Yeah, it's not. It's so insanely volatile that we'll see if they're able to work out a recovery here. But again, it's like I don't know where you're supposed to put it. You can go and you can say how large are the swings today and put it somewhere around there. I don't know. Or maybe it is the case that just trying to have set stops and targets is just never going to be the best way to do it. Maybe that's the lesson. Maybe the lesson is that if things are random, that sets profits and targets probably or in out probably works best, but that's just an oversimplification of markets and that you need to have more edge in your entries and exits. Or you need to have more edge in your exits in general. I don't know. Market Ear says buybacks are back, but ... and I can't see that. Well, and Catherine Ross posting a picture of the heat map, and it's just so red everywhere. It's like everything's down 1%. Yeah, everything's down more than 1%. Here I am over here buying the dip, and I don't know. It's kind of not going so hot right now, is it? It was getting close. Almost. They were only 2 points away from my target there last swing up. But yeah, I don't know. They could very easily fall to a new low. Trade like, that's what I'm doing. Hey, listen, I've been going for broke. I'm like, listen, if I win, it's gonna be like the coolest trade ever, and if I lose, you're all gonna forget about it. And it's a sim trade anyways. No. You know what has been interesting is that I've been spending a lot of time lately thinking about the stream because we were a little bit down at the beginning of the year. It looks like most of you guys came back, like we're at 25 viewers today, so that's about where we should be. Was concerned that we had lost some of y'all with the Christmas break, but it looks like y'all came back. But I was just thinking about what do we got to do to get the stream more popular. I would prefer this stream to be more around 50. That's 50 kind of seems like 50 to 100 seems to be like the sweet spot. Once you start getting over 100, then it kind of gets a little bit difficult to manage. Maybe we'd have to change the format a little bit. But 50 to 100 seems like good. And what do I got to do to get there? And definitely we want to get the channel overhaul. That's the bigger thing, is we want to get the channel to more subscribers, and we want the channel overall to get as big as we can, because we have some important stuff to share with people. And I think I have a lot of value to bring to the world. How do I do that? And then on TikTok, I've been making these market recaps that have been really popular. So now it's just like all in on that. It's like, you got a winner, push it as hard as you can, right? Push it as hard as you can. That's why it's called sim. The more you lose, the more you learn, right? Yeah, I gotcha. I could have tried taking even more risk in here and trying to bring my average down, but like this 4,300 spot is not a terrible place to try and play, but I'm trying not to be like a complete degenerate. I don't want to like take on like really bad habits or something. Do you make a living doing? No. So I have a day job. This is the funny thing. I tell you what, guys, just in case you were wondering, okay? Because let me tell you straight up, I want this channel to be more popular. I want this channel to be 100,000 subscribers. I think, like, particularly these next 2 videos that I'm going to be putting out are things that I think traders should know. I think that these are 2 videos that every trader should watch before they even start trading, to be like, is this really for me or not? And like to really understand what's going on in the market. It's going to be the ones about market microstructure, proven edges, well, not edges, but proven market behaviors like the square root law of meta order impact, and on inelastic markets. The true nature of a markets is what I think I want to call it. And I want everybody to watch it, okay? So I want the channel to get bigger. But if the channel gets big, nothing changes for me. Okay? Just understand. I have like a pretty nice day job. I'm quite happy with it. I'm not like, I'd be very unlikely to move to a new house or anything like that. So this isn't going to change my, so for some people, it's like you come in and you have success on YouTube and it completely changes your life. For me, if I have like massive success on YouTube, I'm just going to put more money into the market. Is what I'm going to do. At that point, I think that any money that I make, it is my moral obligation to put it to work in the best way that I know how, right? Which is probably going to be growing the business, the self, like hiring people so that we get better content on here and putting it to work in the market. It doesn't change anything for me, right? The reason I want it to be popular primarily is because I think that this information is going to make an impact on the world. And I don't think that anybody else is gonna share it or can share it as well as I can, which is like a really crazy to think about. Because there are definitely people out there that know this information better than me, but they're not going to talk about it. They don't know how to talk about it. And I didn't know how to talk about it either, but I've been trying for the last 4 or 5 years, and apparently I'm getting okay at it. So, no. Yeah, I don't make a living from the trading. No, I'm a computer programmer by day. Look, when I'm taking trades here, when I'm taking live trades, I'm risking like $10, right? I'm not saying that you can't make a living from trading, but it's like extremely unlikely. And I hate trying to set that expectation for, everybody kind of sets that expectation for themselves. And I just don't think it's a very realistic expectation. This is like coming in at like, you're like 25 years old and then one day just saying, you know what, I'm going to be in the NBA. Well, probably you're not. Like if you made that would be like this insane story, right? Like they're going to make movies about you if that happens. Why do retailers keep big stops and small target profits? Because it's the thing that is the most likely to give them results in the short term. It's the thing that's the most likely to give them results in the short term. And so retail traders tend to gravitate towards strategies that involve taking on high risk. I mean, you can see it here. This, of course, this trade turned sour, but we took it by taking on a lot of risk initially, and it was working out really well for us, right? There's a reason why these retail traders tend to gravitate towards that. But this is why I say, okay, look, obviously, if your stop is closer than your target, then you're going to have a higher win rate. And if you have a higher win rate, that means that in the short term, you're more likely to make a little bit of money before you run into those losers and you go under, right? But that doesn't prove that that thing works. Or rather, what people think is they say, well, there's this guy and he's trading price action and he's making money right now, so it must work. And it's like, no, because if there was really edge to the price action, you wouldn't necessarily have to add the risk on top of it to be able to make money. You know what I mean? Like that your target is so much closer than your stop is like, okay, there is not really actually an edge to that, right? If there's an edge to it, then you should be able to take it with equal risk reward and still make money, right? But there's not many of those out there. And I go and I back test, and almost always comes out break even. Almost always comes out break even. You're the one guy telling the truth about trading here on YouTube. I'm not the only person. I'm just the only person that actually trades that's telling the truth about trading. That's right. I'm the only person out here that's dumb enough to acknowledge how difficult and unlikely it is for you to be successful at trading and then still try to do it. But there's benefits from trading it still, right? Even if I'm not actively making money from it. Part of it is the YouTube channel, right? There's a lot of value from having the YouTube channel, and that makes you a much better trader too, by the way. Just talking to people makes you a better trader, I tell you what. And there's tax advantages too. You know, if you have losses and you write them off, and that's an extra thing that you can write off on your taxes, and you're more likely to get above the standard deduction, and then you can start adding even other stuff. So there are some tax advantages to it too. But I think that the real advantage of it's kind of like a loss leader. It's like, yeah, you might not make money off of the day trades trying to play interest rates, but I knew what was going on with interest rates, and I knew how to position my portfolio so that when this move came, not only in some periods was I, doing a lot better than the rest of the market, but many times I was like making big gains. Like my stock portfolio is pretty close to its all-time high, while everybody else is down 40%. And how did I do that? Because I trade futures. So I don't know. But it's crazy hard. Markets are incredibly incredibly statistically efficient. So those are, and y'all want to do statistically efficient thing, you want a statistically efficient trade because that's more likely to be like consistent for you, right? Well, how much risks should we give on this before we give up on it? Wow, that was a real stop run. Let's go for broke. Let's go for like I don't know. I'm not gonna put a number out there, but I'm gonna try and buy this dip, and if this is not it, then I'm gonna give up because that looks like the kind of a run that cannot sustain itself. Okay. Okay. Something's going on here in the treasuries now too. Oil's still plummeting. Dollar generally up today. Not seeing the 6J do anything. Bitcoin is just I don't even want to look at it. Bitcoin. It's just such an ugly chart. It's a depressing chart there in Bitcoin. So that's what a fat tail distribution. Right. I'm gonna just remember what I'm doing over here in the ES is not something that I would ever recommend to people to do. Like I don't think that what I'm doing here would make you money in the long run. It's just kind of like a max entertainment value, right? Ouch. My machine is having a hard time here. Kevin Davies. I think I know who that is, but I don't know off the top of my head. I tell you what, I'm sure that almost anybody out there that's talking about trading goes through periods where they make money and goes through periods where they lose money. I don't know if you can really go into it deeper than that, you know? Was it bare minimum? I think that, well, so if you don't have anything, then you're probably going to need at least 2 or 3K because your platform is going to be about $500, right? And I think you want to start paying for a news squawk. And then you're going to want to give yourself some time to do it. So like if you go and you buy the software and put a $1,500 account in there and just trade sim for a while, don't actually put your money at risk. You know, that seems to be an okay way of doing it. That'll keep you up and going for a long time. Because the issue isn't just like how much do you need to trade. Because like if you're experienced, you can go and come in and start with $1,000 account, and you might need a little bit of luck, but it can be done, right? But what your real problem is keeping afloat long enough to actually figure it out. You know what I mean? Like it just requires a lot of experience. And either way, it looks like we're getting some more flattening here, but that maybe the treasuries are going to back off. I does look like so far that what I was seeing there in the in the E-mini, it does look like is coming through. So you can trade micros with NinjaTrader for 400. Should you do it is another story. Yeah, well, but it's not even that. It's like because I mean when you're risking $10 a day, it's even $500 can last you a really long time. You do it right. But the issue is you have to pay $50 a month for data, right? So if you put $400 in there, that's 8 months. And that's assuming that you only trade sim. So Mm-hmm. What are we looking at? So I have a depth. What most of what you're seeing here are depth of markets. If you want to know more about what the depth of market is and what you're looking at, I have a video out there about order flow. I have a whole series about order flows. I would go and look at the channel, but basically these are treasuries and these are equity indexes over here. So we are, gambling on a sim account here, trying to buy the dip in ES. So far, not going so well. It was looking really good there for a second, but they're turning down now. Are they going to go for another new low, or is that it? The world wants to know. Hmm. I tell you what. So is my machine just not? Is my CPU just getting pegged, or is it? Hmm. Yeah, it looks like Ninja Trader's having a little bit of a tough time here. It's still only like using 34% of it. Shouldn't be as bad as it is. Probably dropped a few frames today too. Ooh, there's a good tick in the treasury. Look at that. Oh, CNBC tweeting about the Goldman Sachs analysis about accelerating inflation could cause the Fed to get even more aggressive than economists suspect in the way it raises interest rates this year. Oops. Click on this. I go right there we go. But that's why I'm kind of sitting here wondering, like, why the rates are the way that they are. Why you be like that though? Well, I like that little impulse right there. Mm-hmm. Kind of clashing up against each other here in the 5-year right now. Probably go watch your videos first. Well, it's not as complicated as you might think it is. The more important thing is to understand what's going on in the market at this current time, right? I'm just kind of curious here the way that the S&P 500 has been acting here for the first 45 minutes or so. Like, it's a pretty accelerated sell-off. That last bit of stop run down into the 42.65 area was pretty extreme. If they go another leg lower, like, you're really starting to get into some crazy stuff, right? Now is a good time to be watching, just because you don't see these very often. You want to know how you trade these guys? I'll tell you. Don't trade them. Gets too volatile. Gets too, just switch over to a sim account and gamble like I'm doing right now, because that'll just shred your account to pieces. The way that the E-mini's chopping around right there. I mean, if you get a short and you just hold it, then obviously it's great. But I don't know. I'm seeing a couple of little pushes. in ES there that look good, but they back off. They're clashing up against the wall, and they're not really making the progress yet. Or like they might come back in here to the 2042.75 area. That would be a good win, but they're gonna have to push through even that. Oh, there's a big thing. Treasury just got slammed there at 2.5. That's curious. Yeah, they even tried buying it up and they slammed them again. You see that? So that might be really good. It might be really good for us there. It does kind of look like somebody's trying to say that it's been enough, but we'll see. Oh, the buyers are still there though. Buyers not giving up. They did get past 75. So where was that last 80, 85? Okay. And the buyers are still hitting there at 20.5. And iceberging. 4K iceberg, but big bid after they took it. That's probably going to be enough to get me out there on that one. The market orders and the selling is not as strong as I was hoping for. Where'd you get all of those charts? Well, so if you look, I have a affiliate link for Jigsaw Day Trader to give you a, what is it, $50, $100 off of Jigsaw Day Trader. That's what all of the DOMs are. That's also what this chart in the upper left corner is, the really cool looking one. This one down here in the bottom center is the dollar index. And for that, I use my own proprietary indicator that you can download at speculatorset.com. Try out. And then it's $100 for a lifetime license. This sucks because if the treasuries do what I want them to, I may end up having to get in at a worse price. But why not? It's because of the spread. They're still flattening. I think. Or sorry, they're steepening. They're steepening. The 30 year is going down more than the 5. What's the relationship between treasury yields and treasury notes bond prices again? Well, so first of all, note basically means 5 and 10 years. Okay. They only call it 30 year a bond for whatever reason. It's only in the United States that they do that, but so that's what that's all about. Interest rates move opposite to prices. So you'll see here, what I think will happen is we'll see the 10-year sell here, and we'll see the micro treasury yields buy up. The S&P 500 does appear to be making a much more encouraging bull run now. And there's a significant tick that is good for me. Look at that. Now you're getting some really wild action again in the ES. They look excited, don't they? There we go. Looks like degenerate gambling may win in the end. So you see, for those of you that are new, our Kath cat cat Katkuda. I don't know how you say that. Katkuda. That's is in here. I'm like super like, oh, it's a new person. We really got to make sure that they know what's going on. You see these blue numbers here on the left side of my DOMs? That's how much money you're making or losing. So, and we can want to cancel that, by the way. So this ES by the dip trade is finally in the money. And that buy run was pretty good. They're probably going to pull back a little bit, but we still got a good 35 minutes here to play. So yeah, I wanted to try and like follow up with another order and just take a little bit if they were giving fills. But look, they're not doing it. They're like nobody's actually selling with these. It's a significant drop though across all of the treasuries. I think I played that one really well. I wish that I hadn't have been scared out of it the first one, but it's okay. We made it up. I guess I've been awfully skittish lately, right? Yeah, that's looking really nice. Ooh, look at it go. I'm thinking maybe somewhere around here, but then I'm also thinking there might be. Let's just save ourselves a spot in line. See, the ES is so we should note that 4,300. Remember, 4,300 was the spot where we're like, okay, like that's really far away from there. We can put our stop there, and then I decided to go for broke. But 4,300 is still kind of crappy price, right? Oh, you bricked your PC yesterday. Oh, what did you do, dude? Nothing will upset me more than ruining your PC, man. You know. If I bricked my PC today, I would be pretty unhappy. I would probably still be able to stream, but I'd be pretty unhappy. Oh, I did get the name right? Are you from India? That kind of sounds like an Indian name to me. And I get an unusually high number of Indians watch my channel. I think that they're just more interested in trading in their markets in general, but could be wrong. In fact, I was looking at it the other day. I think I get more viewers from India than I do from Canada. Isn't that interesting? And let's reset that again. So E-mini is kind of looking at like it's in a spot where they could potentially do a pullback, but they're actually kind of resisting the pullback. Kind of looks like they want to continue pushing up. It may well be because, like I said, that stop run down towards the bottom, like not only were you just getting to really crazy prices, and the order flow was doing some things that would make it easier for it to flip around. So you're trying to update the buy. Oh man, no, that's the worst, dude. Right? I know when your motherboard BIOS goes out, that's like one of the worst ways for it to go, dude. Because it's like, well, it was working. It was working just a little bit ago, and now it's not. Oh, you're Russian. So do you think that Russia is going to invade Ukraine? We're all here wondering. We're all sitting here confused, like, why would they do that? But then the US is pulling their people out of the embassy and everything. It seems like it's going to happen. And I'm just like, is this really happening? Okay. Okay. I don't know if I don't know if the US will actually do anything, but I'm like, I can only imagine what people in Russia might be thinking. My name is Seabar. Oh, okay. I get you. I get you. They're gonna bust it. Like there's this kind of high here at 302.75. Oh, yep, they did. And there the treasuries breaking 17.5. Well, not breaking. They've touched 17.5 before. Need 17. Let's do some clear current trades so that we get a better idea of where we've been. Oh, wrong one. This one. There we go. Okay. That'll help us keep track of what the last high was a little bit. Benchmarks. So the third 4,300 was one spot. Then we got 08 and 18. So 18 was kind of where we thought things were going well, and then they turned around. So once we're above like 1820, then it's like, let's just ride this mother, you know? No, I wonder. We had a little bit of a move where it was like, I told people like, you're probably not going to make a living from trading. I think there's always like a couple of people that are like, well, I'm not going to watch this channel then. They double it. They want to believe. That must be it. Because otherwise it doesn't make sense. As soon as the big gamble trade starts working out, that people stop watching. That just doesn't make any sense at all. Cat says if we had to? Yeah, I think the whole thing is that they've been saying like Russia is saying that they're like ready to respond to any aggression. And the US is like, well, we're not going to do anything, but the Russians are probably going to do a false flag attack. And it's like, okay, I need to sort that one out because it's going to happen. It's going to happen. And then America is going to say it was a false flag attack. And the Russians are going to say that the Americans were being aggressive. And who are you supposed to believe? Well, of course, I'm probably going to believe the United States, and you're probably going to believe Russia, right? How do you reconcile that one? Because neither of us are in the position to really, truly know the truth, right? We just happen to trust our governments, which, do you ever really trust your government? I trust the American government more than the Russian government, but they're both going to lie to you if it helps them, right? It's coming and old Joe is going to take a nap in response. I think so. Yeah. Well, I don't think that they're going to get militarily entangled in Ukraine. No. I think that there might be like sanctions and stuff. Well, they were saying they were going to cut them off from SWIFT, right? Yeah, you cut them off from Swift would hurt. Cut them off from Swift would hurt. I'm a little concerned for you, Kat. We have a friend. I mean, you're not the first Russian to come here through the channel, but a lot of those guys haven't been around as much. That economy could crater or hard if they got cut off from Swift. It wouldn't be a disaster because the Russian economy is pretty self-sufficient. But getting cut off from the rest of the world like that is not good for your economy. Is not good for you. Man, Air Cages is getting why are you so salty, Air Cages? You should be like up hardcore on your position and be all super happy and friendly today. What's the deal? Are you still holding it? Do you take your profits on your crypto short? Oh, you're from Czech Republic, and in your opinion, Russia needs to expand its influence to Ukraine to create. Okay. Haven't they kind of already expanded their influence? Here's the thing that I don't think that people in the United States realize that's so crazy is that like they're already there. Like they've got like they say that they're like independent militias, but they're like the Russian military is basically already in the Donbass region in Ukraine. So it's not enough. Okay. So are you guys that concerned about the what do they call a right-wing radicals in the Ukraine? Because that's the other thing that I don't get is that like they're saying that there's these right-wing guys in Ukraine and everything. It's like, okay, maybe there are. I'm always a little concerned when I start hearing politicians say this right-wing extremist or this left-wing extremist because they always try and exaggerate, right? But let's just give them the benefit of the doubt. Is it really is that really something that necessitates the country stepping in? Like if there was right-wing radicals in Mexico causing a problem, should the United States government step in and like actively do something if Mexico didn't want them there? There's no way they would do that. Mexico always wants us there, though, and they do kind of help in the drug war, or they were. There's another good tick there in the 10-year. Probably need to pay attention here, huh? Yeah, every country has right-wing radicals. What did you see? There was a study this week because all of the psychological research has been done on right-wing authoritarianism and like what are the things that right-wing authoritarians tend to believe and is find encouraging or whatever the deal is. There had never been any left-wing ones, so somebody did a study for left-wing radicals. But it's so tilted, especially in the United States. I think you know what though, honestly, I think the reason that it's like that is because Western society is more left-wing than it is right-wing these days. A little bit more left-wing than it is right-wing. They're not like full-on socialism because they kind of realize that socialism doesn't work all that well. But like in terms of like, do they tilt more left or more right on like the psychology scale? I think that they tend to be more left-wing. And Western society probably would not have gotten to where it is today if it was not for that leftward tilt that caused progress, right? And you got to have a good got to have a strong right wing to that's able to rein them in when they're being crazy. I think one of the problems we've had here in the United States as of late is that the right wing prior to Donald Trump, had gotten a little bit weak and was allowing the left-wing radicals to really inject some really dumb ideas into our society that I think are being harmful. You're going all in oil and waiting for 200. So how are you doing? How are you playing oil? I'm wondering if I should just get in on USO or if I want to get into a different stock. Oh, corn is having a run here. And oh, that's probably because the dollar is getting creamed. Yeah. Calling yourself a communist is more accepted than calling yourself a Nazi, which is crazy to me. Right? Well, you know what? I don't know. I don't see any significant news right now, Magic is just the biggest news is just what the indexes are doing, are kind of doing crazy things all over the place. Good luck with that, Air Cages. I don't know about $200 a barrel oil, but I think that $100 a barrel oil is a pretty good target. And when they get there, and I think they probably will, just kind of have to see what what things look like then. Yeah, USO is okay. I'm kind of wondering if trying to tie myself directly to the price of oil is better, or if it's better for me to try and go for a foreign company. I just buy physical barrels. Oh, okay. Well, the other thing is I could try options again. It looks to me like that the oil options traders are still not pricing this curve correctly. But I'm a little worried about doing it today. I'm a little worried that even if the Federal Reserve is kind of dovish, I'm a little worried that the market will still sell off on Wednesday. You know what I mean? And then maybe, I really want to see something going on that's, doesn't make a lot of sense for me to want to get in oil, or not for me to want to get in, but just I'm trying to get the best price. That's all. Well, it might take I think that eventually the E-mini will get back to that 43.20 area that we then kind of eyeing. But it might take a long time. Now they're hitting into 16.5. But then backing off. Also, we're kind of getting this convexivity again, where the 10-year kind of is moving differently from the other ones. You can see the 5 and the 30 pushing down more than the 10-year. I haven't posted anything in Discord today. Do you think World War III is priced in? No, it's not. It's definitely not, dude. If the United States got actively militarily involved in Ukraine and it turned into a real world war, like the economy and the world is not ready for that in the least bit. No way. Yeah, it would be a bit of a shock to them, I think. Okay. Cool. Okay, I took my profits on that, so that puts me up $10 after commissions on the day. Good deal. Actually, $11. $11. I didn't need that extra tick. I think I might be able to wait for more. I think 35. I don't know. I mean, this flow that's been coming through, it has an awfully good consistency to it. There is definitely some sort of a large sell meta order coming through here in the treasuries. Where it takes some, I'm not sure. I think for me, it makes sense to take it right here just because they might come back a little bit. Let's just make a note here. Where was it? 33? Okay. So let's like reset that like that. Okay. They might come up here, but I don't, it kind of looks like, yeah, that's what I was thinking. So again, what are we looking for here? What is the latent liquidity doing? If the latent liquidity gets like this, it's actually probably more like this. It's actually probably more like, oh gosh, what the hell? Why did it do that? The resting liquidity is probably like this, and then there's a lot more down in here, right? Because these prices have already traded, so these offers are all new, right? Whereas these bids down here, they've been there for a long time, so it's going to be a little bit harder for them to push down through this area. That's kind of what I'm looking at. So when I see them smashing into a price and there's a lot trading and the liquidity doesn't show that like there's a lot of latent liquidity there to trade it, there's a pretty good chance that it's going to come back a little bit. And if I've only got 15 minutes left, then it's probably the best call is for me to just get out there at 73, right? And look, we're already a good 4 ticks lower. So I think that I'm pretty happy with my trade. I wish I hadn't, I took it twice. I took it once and like got scared out of it, and then it came back up, and then I was okay and held it. Wish I hadn't have FOMO'd in and out on that first one. But do you know this company, Seth? VSMO. I've never heard of that before. No. VSMO. Why does that start VS, Visual Studio? Wow. The name of that company, Corporatia Vismo Visma. I don't know how to read Russian at all. I tell you what, I find Russian to be a really interesting language that I would like to learn, but probably Chinese and Korean are above them on the list, and I just don't spend enough time learning. Maybe I need to set it up like once a week. So like last night, I did my book. I did my random probability book, and I did the question problems from the first one. It took me a good 45 minutes, an hour. But I felt good at the end. I usually don't feel good after doing something like that. Usually my ADHD mind is like, you finish something, like, whatever. But that was like, I want to do that again. I felt really good that I had sat and put some time into that. But I also want to read Nassim Taleb's books. And I should really put more effort into learning Chinese. I need to find some Chinese friends here. That's what I need. I need to go and find a Mandarin-speaking person with a baby, so that we can be friends and they can bring their kids over and play. That's what I need to find. If you know any Mandarin-speaking people in Davis County, you let me know. Davis County, Utah. Man, that comeback, is that just gonna almost completely retrace, huh? Like that is where we got in, right? No, we just got in at 715. Still, this is a big pullback. For me to catch the exit that well, I mean, I was reading the order flows, so I want to say it's a good read, but something kind of deep down is kind of saying to me, well, Seth, you probably got a little bit lucky there, that you realized that it was, a thing. Because that was a lucky exit, man. Lucky exit. Well, guys, I got about 5 minutes left. So I should probably go into just a couple of things you should know, especially if you're new. Do have a TikTok. I've been doing really well on TikTok lately. Like the TikTok is taking off, guys. I don't want to get myself too excited, but I really feel like that the TikTok may be the thing, like the formula that we need to really accomplish some of our goals. So I'm really happy about it. So we'll have that market recap on TikTok. Also, make sure you check all of the links in the video description. You know, if you want to help the channel out, we got these mugs. Everything that we make, it just goes back into the channel. We want to make the channel better for you. And you guys have just been the best audience ever. So, and then another thing is, you know, because I want to help you. I tell you, sometimes I've been getting these things where like people want to do affiliate links. And I'm like, okay, but what's in it for my viewer, right? You're not going to give my viewer a discount or something. Like, what's the freaking point? I'll make money, sure, but no. But for you guys, discount code for Jigsaw in the video description below. That's a really good one. I really like Jigsaw. I have to tell you, this is a great piece of software. It's not the only piece of software. I know a lot of you guys use Sierra charts and everything else, but I really like Jigsaw. I think it's worth it. So, and yeah, I think those are the big ones. None of this matters during World, man. You I tell you what, you're the what a doomer. What a doomer. You really think that's going to happen, right? Because I think what's going to happen, here's what I think is going to happen. No offense. The chat is taking too long to get to you. You know, something that you might happen to you is you might be delayed. And if you go to the bottom of the YouTube, you know, window or whatever you call it, there's like a little live thing and like a red light next to it. And if you click that, it will take you to now. And because the chat should only be delayed by like 5 seconds max. So I don't know what's with that. No, I think that what's going to happen is the Russians are going to fake a false flag attack, and then they're going to attack into Ukraine. And then the United States and the rest of the world are going to go, naughty, naughty, you shouldn't have done that. And they will cut Russia off from SWIFT, and which will be really bad for the Russian economy, but it will also strengthen the economic ties between Russia, Iran, and China, which won't be a good thing. And then Russia will just start doing it with another region in Ukraine until they totally take the whole thing over. I think that's what's going to happen. But in the US, I think generally people aren't going to care, and that it probably won't have too big of an impact. There might be an initial impact on markets that will quickly go away. Maybe. I don't know. That's what I think. But you know what? That's such a complicated situation. I'm probably going to be wrong about all that. We sent 5,000 troops with a strong letter only. Yeah. I tell you, you guys on my stream, you're a little more hawkish than I anticipated. I thought that you'd all be arguing with me. Well, why do we even care about Ukraine? When you go on TikTok, I tell you what, the propaganda on TikTok is real. The state sponsors of TikTok in China are totally throttling and pushing certain videos based on how good it is for them. 100% they're doing that. And so like these creators that are like, hey, we have no business in Ukraine, let them do whatever they want, we need to leave the rest, right? Those guys, they're all taking off on TikTok right now. And I would have thought that a lot of you guys would have said that, but you're all like, yeah, let's do it. World War III, let's go. My defense companies, they need a rise in stocks. Let's go. Okay. No? All right, well, guys, it's time for me to get going. Make sure you subscribe. Click that bell icon so you don't miss future streams and videos. I only put videos out every other week right now, so make sure you click that bell icon. It's a useful tool. I will see you guys tomorrow. And also, Federal Reserve Wednesday. Don't miss that. We'll be streaming the Federal Reserve meeting. That's going to be huge. So, see you guys then. In the meantime, stay profitable, friends.